We're joined by Subi Rangan, Shell Fellow in Business and the Environment, also Associate Professor of Strategy and Management at INSEAD. You've been taking part in a panel discussion here at the INSEAD Leadership Summit Europe on business leadership in a time of responsibility. Has leadership changed given the crisis?
I think the absence of leadership is in part an antecedent, shall we say, if not a direct cause, an antecedent to it's complicitous in this crisis. And we need to also see that the domain from which leaders are currently engaged is much more the political domain. Policymakers, politicians, that's where suddenly attention seems to be shifting, not only from the wider public, but also from business itself. And from the wider public, maybe they're saying, we have suspended our confidence in business leadership. We thought they knew what they were doing. We invested financially and our human capital into this, and now we're out of a job, and my pension fund is down, my house value is down, and I know that the market system is complicated and has this kind of volatility, but certainly I must look elsewhere for reparations. Political leadership has in fact always been important, but was not this prominent a decade ago. In the last years, with global warming, with certain other, with the security issues post 9/11, the political issues political leadership has been becoming more important. This one accelerated that process and brought them back to the center of the stage. They never completely went away, but in the 1980s, some people thought, okay, leadership is now all about business leadership.
And a certain amount of disdain as well.
And a certain amount of disdain, sure, but I think the disdain that, so there's been kind of this, imagine that we believe in the conservative principle. There's a certain amount of disdain, and that's fixed. It used to be all directed towards politicians and political leaders, and now it has been, it's going, right, exactly. So I think true great leadership is not a common occurrence, and there are many good reasons how it is that we elect our leaders, and even in democratic societies, how we often have leaders that we, after electing them, we are disappointed by them, but it's almost in a setup to fail. So our current system of self-governance, of social construction, we create more or less the circumstances that we then inhabit and experience. And decision-making and power is often concentrated. Where that power tends to be concentrated, those individuals we refer to as leaders. Whether they actually are leaders or whether they are just decision makers and concentrated holders of power, that's a different question. So I feel, has leadership changed? I think leaders have changed, but leadership, I think we are still not able to distinguish between people who hold power and people who are leaders. Occasionally, those coincide. Often, they don't. The people who hold power are not necessarily leaders. They are interested in continuing to hold power, and they're interested in satisfying the expectations of a larger system, and that larger system is the market system. And that market system expects a certain continuity in terms of how resources will be allocated and rewarded, and again, it's a big price system. It's a very large price system. I think it's a fairly efficient system. Is it always effective? No, not always effective. Can we anticipate these? Is that the job of leaders, to predict? No, I think it is to, respond to weak signals, Am I optimistic that the crop of leaders in the future post this crisis will be endowed differently? Not unless we train them and not unless we expect different things from them. So it's a very long way of answering the question, has leadership changed post-crisis? The short answer would be leaders have changed, and the domain of leadership, which is politics more than business, that also is a shift that is visible to us. Now, if you stick with business, has leadership changed? No. I think we are shaken in our model, and we're looking and saying, did this not give us about 20 years of a good run, good macroeconomic growth, 50 years if you take the longer perspective? So I feel we're not ready to wholesale kind of say, oh, this was an obvious mistake, we know how to fix it.
But there is a sense that many business leaders are still in denial and are not admitting that they've made mistakes, especially in the banking sector, and that has angered people.
Yep. So I think in a previous interview I had talked about the price system. I mentioned that just now. If the central bank sets an interest rate, that's a price. If I can lend in a confident basis at a rate higher than what I can borrow at, then part of my fiduciary duty, if I'm a bank, is to try and close those opportunities. When I go over the line is when I start to create the demand, when in fact there is no demand for this lending, but nevertheless, because I can make this clean arbitrage on the cost of funds or something like this, this is questionable. The incentives that's the price system. Which performance is rewarded, and the higher the reward, the higher the price for a particular kind of performance. So I think we underestimate the notion of this invisible hand, and this invisible hand that is guiding resource allocation and guiding behavior is the price system. Whether it is equity prices, home prices, cost of funds, borrow rates, compensation and bonus schemes, all of these are prices. So systemically, there are two things. One, there are many things that we value that we cannot measure, and therefore we are not able to put a price on it. Long term versus short term. I'm not able to value the long term. I'm not able to put a price on it. So future markets are incomplete. So partly what happens therefore is those leaders or those business leaders or business executives who are making decisions, their frame of reference is signaled to them and accessible to them through these prices. What's outside that frame? If you don't measure it, if you don't reward it, then should I be, because you've sent me the signal. If you move the cheese here, you're telling me go this way. If you move the cheese there, you're indicating go that way. I can't be entirely and only solely responsible for going in that direction where the cheese is.
How do you think leadership will change after the downturn, after the crisis? Will there be fundamental changes? Or will we just have more of the same?
Yeah. I think certainly people will feel more accountable in terms of the cost of performance. So I don't know to what extent we are going to redefine what is performance. That's where I'm harping. But I'm not sure that that's where the bulk of the harping is going on. The bulk of the harping is, let's be more accountable. And so I think there is going to be what we are already seeing, which is a initial conservatism. People are going to be more reluctant to go out there and do things because they will want to justify them by some new standards or new regulations and so on. So in the short run, my sense is that we will see a less tendency to explore, less tendency to innovate, less tendency to go outside the box.
Less risk-taking.
Less risk-taking, effectively. And I think the question is, will leaders Will we redefine, that leaders have to somehow embrace these seeming contradictions of innovating but also being judicious and cautious, of thinking about the longer term but also ensuring performance and cash flow in the short term. There's going to be some reflection, and I think at this point people are threatened by the cost of sanctions. Therefore, if they err, they will err on the side of being conservative and avoiding the errors of commission, or minimizing that. And I think this is, and certainly we will also see people going towards initially lower powered incentives. So the $1 a year salary, no stock options or bonuses for this year, etc. But it seems to me that it's going to be vastly inadequate. If we are really hoping that leadership will change in proportion to how much it needs to change, I think we're going to undershoot. Partly because business schools like us aren't already as effective in generating that, and because the broader system of how status is a big thing, and status comes from having a certain amount of power. That power is very much related to wealth. So long as human beings are wired to seek status, we will be wired to seek relative wealth. This is part of the challenge. How do we bring status to, so why is Warren Buffett so famous? Partly because he's one of the most wealthy individuals in the world. Not only is he wise, but if he did not have the wealth and he were saying everything he was still saying, I'm suspicious or skeptical that people may not be as attentive to what he has to say. So the hedge funds, the big banks, the money is going to be, we are far from grappling with all that.
What changes would you like to see then?
It would be important for business schools to really start to shift the expectations of what is success. So partly our definition, we are architects, or we are at least co-authors in defining what is success. So maybe we can't change what is hardwired in terms of status. But if we give status only to the wealthy, I think we are deepening and perpetuating where we're coming from. We need to be creative, firstly, in business schools in creating other dimensions to which we will attribute high status so that you can be famous without being rich. This is something, and then that has to be complemented in our curriculum in the way in which we will take our executives and take our younger MBAs to go and see consequences, to go and see, in fact, what are the real issues in society and how you can become famous, how you can have impact. So I think this is on the part of business schools, really shifting the expectations, redefining what is success, what is high performance. On the part of corporate governance, which is all of the wise people who are distinguished to serve on boards and have other stewardship roles in selecting CEOs or the search firms and so on, I think they have a very important deep reflection to do on what is the time horizon, and if they don't start to install a foreseeable consequences demand on their management, and they cannot, of course, exempt or release this management from quarterly or annual filings. I don't think we're going to do away with that. That is important. But I think a longer term, the foreseeable consequences, whether that is a 5-year or a 10-year horizon or a 30-year, I don't know, and both a micro and a macro. Not only what's going to happen to this company in 5 years if you pursue this strategy, And by the way, your contract may end or you may be retiring next year, but we and this organization should stay on. So please tell me the foreseeable consequences at the micro level. And by the way, if everybody is pursuing the strategy you are following or we are following, how will society kind of come out? Will that still be good for society, for all doing? That kind of a oversight, I think, is going to be important. That and if people don't have an adequate audit or metric for that, we need to develop that. That's where some innovation in corporate governance is going to take place, is to start to bring that accountability on a practical enterprise level, not at the regulated central supervisor government. That's too heavy-handed. That cannot be right for one size fits all. I mean, government cannot have a million regulations, then it becomes too complex. And that creates a lawyerly industry with lawyers telling you, well, but you're in this telco, which is this way. And the third issue is the issue of incentives. Incentives are important. We all react to them. When radars are put on the highways, at least in front of the radars, people will slow down. And so it's very clear that incentives and disincentives matter. How creative can we be about deferred compensation? How creative can we be about not over-incenting observable behaviors and completely under-incenting less observable behaviors? I think organizational economists and incentive theorists have their work cut out for them. And again, it comes back to, how do we give you status? How do I promote you? So there are good organizations, I think, that are employing, the career progression as an incentive. You will become managing director, you will become partner, not just for making rain, but if you live up, if you are capable of demonstrating that you perceive, you are attentive to weak signals, you act on those weak signals, you are able to reconcile some of these seeming contradictions, then we reward you with promotion. And that gives you, so I think these are some of the things I would like to see us move in the direction of. And we're not omniscient. We will not have a perfect system. And every time we have a system, people will game the system. So it's just like the viruses and the antibodies, and they become immune, and then we have to redo the treatment, because that treatment for malaria or for TB or etc. So it co-evolves, and I think this is a constant challenge. But if we want to make progress, we've got to start by saying what's the definition of high performance at a minimum.
Subi Rangan, Associate Professor of Strategy and Management at INSEAD, thanks for joining us.
Thank you, Stuart.